as we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Welcome, investors. In today's analysis, we're cutting through the short-term noise of inflation prints and Fed watching to focus on the bigger picture presented by Tom Lee. He argues that the market's muted reaction to a hot PPI report reveals a crucial truth. Investors are already positioned for turbulence, and the real debate is no longer about recession, but the nature of the Fed's dovish policy. Whether they cut rates by 25 basis points or do nothing, the economy has proven it can handle current conditions, and the worst-case scenario of a rate hike is off the table. But this short-term stability masks a much more profound, long-term structural crisis. A crisis for which Bitcoin is the only logical solution.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
I think that the arguments and elements for a rally to continue are in place because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
Sure, I agree, and people have said that throughout much of the day. But it seems to have changed the conversation, if nothing else, about the amount of rate cut we might get in September. Is that fair?
Yes, it's very fair. That is correct. But if as we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Well, what if they don't do anything? I mean, Steve Leisman, who's going to join us in a minute, made the argument earlier today that this changes the conversation from 25 or 50 to 25 or nothing. What happens if we go on the side of nothing? Can this market stand up under that?
Yes. I mean, because number one, and I'm sure Steve's going to talk about this, that the economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world on policy rates. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move.
Well, it could be a hawkish cut. And Leisman's thrown out that too, right? If they cut 25 and leave us with the feeling like, all right, you got your little lollipop here, everybody, and now we're going to wait and see.
Yeah. I think the market reaction, of course, is really how people are positioned. And we at FundStrat, we're finding a lot of investors are positioned as if we're going to see a pickup in inflation. So to them, they were expecting a really hot PPI number, thought this was going to start a decline in stocks. And that's why I think markets didn't fall as much, because I think many people have been positioned for a sort of a hot set of PPI numbers.
There's discussion about will it be a quick transition off the dollar or a slow transition? I think it's actually going to be a quick transition because fiat currencies always die in a spectacular manner. It's just a question of when. And you also have to factor in that the US dollar is in a very unique position because it is largely digitized outside of stablecoins. Like, it is a digital thing. It's reached market penetration that no other prior reserve currency has reached, right? Like, it's sort of married itself with technology and ingrained itself in economies around the world. So it might actually take a few years, maybe 5 years, maybe 10, I don't know, but it will end, but it's taking longer than normally it would have. That a non-digital fiat currency would not have this lifespan. When people wake up, they all wake up. It's not like we'll start transitioning off the dollar and the corner store near your house is going to keep taking the dollar and changing their prices to like $1,000 for a Kit Kat bar. right? It's just going to be a quick thing once that thing hits, and they'll just switch off and take Bitcoin because they can't afford to not take Bitcoin. They can't afford to take the dollar at some point. And I think Germany with the mark dying, that's a good example. It happened in, a year-ish. And that was a non-digital thing. So I think it'll be faster for the dollar to fail. But until that happens, it does feel like Bitcoin is extending it by integrating with it in some ways. If you look at all the warning signs, it is all there for anyone to see plain as day. There is infinite money now. Someone from the Federal Reserve said that in a clip before, but there's infinite money in the Federal Reserve. But it's true now, and you're seeing signs of that. If you look at the Bitcoin treasury companies like Strategy, they're borrowing at 0%, right? They're effectively tapping into the infinite money out there and converting it to Bitcoin. And the question is, when do people figure this out? And I think when people figure out this, that you could basically, invest, I don't know, $40,000 and start making back your annual salary free, I think a lot of money is going to flow to Bitcoin. Some of it will flow to other things like high time preference activities, but a lot of it will flow to Bitcoin once people figure out that there is infinite money out there and anybody can tap into it.
The core of Lee's long-term thesis is a stark warning about the inevitable fate of all fiat currencies. He argues that we are not heading for a slow transition off the US dollar, but a quick and spectacular collapse. While the dollar's digital nature has extended its lifespan beyond that of historical precedents, its end will be swift and decisive. This is because the system is now openly running on the principle of infinite money, a reality that sophisticated entities like MicroStrategy are already arbitraging by tapping into near-zero cost debt to convert failing fiat into the absolute scarcity of Bitcoin. The critical question is not if the public will wake up to this reality, but when. When they do, the exodus from the dollar will be immediate.
It can be done, just like anything can be done, right? The only thing that can't be done is printing Bitcoin out of thin air, but anything else is possible. So I've talked about rebasing to Bitcoin and just setting an exchange rate of 1 sat to $1. And that just takes a politician. Maybe it's Trump, I don't know, but somebody just to say, we'll let you redeem your debt for this. And that's it. I mean, how do you peg a dollar to gold? It's by decree. And pegging a currency to Bitcoin is the same. It just depends on the motivations and the necessity of doing so. I think when things get bad enough, every card is on the table, and we're seeing this, right? Some of those cards are bad cards. It's the rolling out of a CBDC like in Europe, or starting to control the internet like in the UK. There are things that are happening, and you can see these things happening are a direct response to other things that they're trying to mitigate or distract you from. So there are a lot of, just take the UK as an example, there are a lot of societal problems. And now they're focusing on this one particular thing, which doesn't do anything for the other problems, but it definitely distracts and gets people enraged. But it just goes to show, like, every card is on the table now. But that rebasing the Bitcoin card is also, it's in the hands, and it can be played at any time. And that's why I say plan accordingly, because you have to be ready for when these things happen. And the best thing to do to be ready is to be in Bitcoin. If not the federal level, definitely at the state level. And you're already seeing a lot of that happening in Texas. But I've said this for, 6-7 years now. But eventually mining and energy generation is just the same thing. It's two sides of the same coin. So if you have a national utility, they're going to mine Bitcoin just because it makes sense to do so, even from a grid management perspective. The monetary upside is just icing on the cake. And as people understand what Bhutan did, mining Bitcoin and getting $1 billion in Bitcoin in their reserve, more people will do that. And that's something we're trying to do now at Gen 3. We're trying to engage with governments to start small pilot projects. We found that this might be a better strategy than engaging at the very top and, meeting with the president or prime minister and, trying to get him to do something, because it's really hard to get them to do something, not just not just at an intellectual level, but at an execution level too, for the reasons I said before. It's hard to do things in any government. Well, it's also a tool. So for Gen3, we like to work on nation state adoption. So we can go to other countries and say, hey, look at the SVR. And they're not going to ask, like, did they do anything? And we're not going to tell them that, but we'll say, hey, did that. So why don't you do that too? And if you get enough people doing that, passing legislation, creating things like a framework for an SVR, eventually one of them is going to execute on that.
Yeah. Is it possible that the United States government is acquiring Bitcoin quietly? Because you'd think there'd be an incentive to do so. If they announce a purchase, there's that Omega candle.
I don't think it's possible. It's hard for any government to do stuff in secret. Well, things that are beneficial for the country, it's hard for them to do it in secret. Other things, it's much easier. Like, you could do a lot of things in secret, but for something like Bitcoin, like an asset, it would be like saying, can you buy gold in secret? It's probably hard. You need to, because it's part of the financial system, and you have to be all above board, right? Like, where did you buy from? How is it custodied? There's a ton of questions that have to be answered. Like, it can't just be Trump directing someone in some agency to buy and send it to his Blockstream Jade wallet on his desk, right? There's got to be more controls and process in place for something like that. So I think it's really hard for a country to sneakily buy Bitcoin, even though they should. But I think it's hard, just like it's hard for them to get to the point where they can't even buy, right? Like the city of Vancouver, Mayor Ken Sim has said that he wants the city to buy Bitcoin for its treasury, for its reserves. But he's said, like, there's 2 years of red tape he's got to go through to even get to that point. So, yeah, the answer is they could do it in theory, but in reality, they probably need to go through and cross the T's and dot the I's before they can really buy Bitcoin.
Looking at the endgame, Lee outlines the potential pathways for a world grappling with this monetary transition. The most direct solution could come via political decree, a rebasing, where a government pegs its currency and redeems its debt at a fixed rate to Bitcoin, much like the old gold standard. On a more foundational level, he sees the fusion of energy and money as inevitable, where national utilities become major Bitcoin miners to optimize their grids and accumulate strategic reserves, following the playbook of nations like Bhutan. While acknowledging the bureaucratic inertia that slows government adoption, Lee's analysis concludes that every card is on the table. The only rational preparation for this inevitable, rapid monetary reordering is to be positioned in the one asset that cannot be printed, Bitcoin.